on the back of that. It's an important channel. It's working. There's been a significant amount gone out that way, but there's a very large amount of room for quite a lot more to go out should that be necessary. Actually, when we look at liquidity on the bank's balance sheets, it's not in too bad a shape. Simon.
Did this latest cut take into account things like yesterday's announcement by Fonterra of a big downgrade in their payout forecast? And I think overnight the IMF cut its outlook for world growth to about 0.5%, which is the lowest apparently since the Second World War.
Yes and yes. The market, of course, had been expecting something very close to the Fonterra outcome. We had expected something like that, and we had already put that into the forecasts. The IMF data, yes, we got that a little while ago. We've been in close touch with the IMF through this period. And
during the process of the easing, have you been reasonably content with how the New Zealand dollar has tracked down?
Well, we've felt that it has moved within the broad bands that one might expect it to move within, given what's happened to commodity prices, and that's been broadly helpful for the New Zealand economy. So we've got no other view. It's being market determined. That looks not inappropriate.
You seem to be concerned about household and firms cutting back on
spending. Sorry, could you speak up a bit?
You seem to be concerned about households and firms cutting back on spending. So how do you define what you're terming, an unnecessary contraction, if they cut back too much? You seem to be worried about that. So how do you define by what is an unnecessary contraction?
Look, that's going to depend a lot on the individual circumstances. There's both households and businesses in entirely different positions, and they'll be making those judgments themselves. Actually, what we observe so far is that New Zealanders are aware of what's going on. They're taking appropriate measures, but they're not going overboard on them. So I think what we're already seeing is broadly appropriate. The New Zealand economy does need to save more, but it doesn't need to do it in a massive move at the expense of consumption. And again, we're not unhappy with what we're seeing there.
You're not worried about a climate of fear being created around this?
Actually, I think the New Zealand environment at the minute, it looks more balanced to us than do many overseas pictures where there's been huge depressive media comment, and it has had its impact on consumer confidence. That hasn't been the case so much here.
Dr. Bollard, the IMF seems to be pretty alarmed about the state of the world's banks, that they're in no fit state to enable a recovery and that further policy interventions will be required offshore. From your discussions with your peers, do you expect those changes to occur in a timely way?
Sorry, changes of...
Well, for example, creation of bad banks, further nationalisations, those sorts of measures, the IMF seems to think are required to get even a feeble recovery next year. Do you agree with that view? Do you think it will happen? And do you think any of their comments hold good for New Zealand as well?
We've been in close touch with our colleagues in other central banks around the world. They, of course, faced this, particularly in the United States, starting a year and a half ago now, so there's been a huge amount going on. We've had the advantage of hearing about it in advance and long before it's hit New Zealand. Most of what we're seeing in the financial sector in North America isn't actually directly impacting our financial sector. We think our financial sector continues to look sound with good balance sheets, and it's more just a matter of seeing it continue to do its business. Yeah, we've got a lot of confidence in our colleagues in other central banks.
In October you commented that there was issues with the commercial paper market, and that if those issues didn't resolve themselves then we might have some serious issues at the beginning of this year. Have those issues resolved themselves?
They're starting to. Again, with a lot of assistance from the Federal Reserve and others, they're opening up. We've already seen the Australian parent banks go out and quite successfully start to raise money, which is a little bit longer term than the sort of funding that had been in place. And I would anticipate that a number of our banks will follow those in the next couple of months.
The other thing too, your reluctance to express a view on where mortgage interest rates should fall seems to be a little bit at odds with the fact that in your statement you're specifically asking them to move their interest rates. Well, how can they know where they're supposed to move them if you won't say?
Look, this isn't Muldoon days. The government doesn't tell the banks what the interest rate ought to be. It's a comment about the direction and behaviour rather than a comment about levels. We do not tell the banks what rates they should be setting. Other questions?
The head of AMP Capital Investors this week was talking about the official cash rate, and he was expressing the view that it probably can't go much below where we've moved it today because of New Zealand's very heavy current account or external deficit, and that we need a certain margin over overseas rates to attract the flows to balance that deficit. Do you have any comment on that?
Only to say we think we still have plenty of room to move if we need to. And that's a more comfortable position, and one that most of our OEC partners can't now say they're in. Other questions, Bernard?
The Federal Reserve and the Bank of England are now looking to lend directly to corporates, and Australia is setting up a fund on property. Do you think the Reserve Bank should have a similar facility, or have you looked into something like that?
Well, look, we're definitely keeping in touch with all the unconventional things that are going on in some of the central banks, or as Mervyn King, the Governor of the Bank of England, said a week ago, they're now looking at unconventional tools. We haven't had to do that, but we certainly stay aware of what's going on at the minute. Our aim is to ensure that the banking system does the job here.
Are you concerned that the banks here haven't yet used the wholesale guarantee, and do you think they can get the long-term funding they need?
Well, they haven't had to yet, and their judgment has been that given liquidity that's there, it's not been urgently on their agenda. I do anticipate a number of them will go out over the next couple of months to do that, and it's in that context that the government yesterday announced a reduction in the price that will be charged to banks for that wholesale guarantee.
Dr. Bollard, was a cut of 2% seriously considered?
We consider all options, as you might expect, and we did look at a range of things, but we won't discuss the range that we looked within. We're pretty sure that 150 basis points is the sort of ballpark that's desirable at this point.
How low could interest rates go before you're effectively flogging a dead horse, where you're not actually having any impact on the economy?
Well, provided the banking system is working satisfactorily, which it is, provided households are borrowing, which they still are, and businesses as well, then we're not really in that territory which some people might characterise as pushing on a string to try and push it down further. We think monetary policy is quite effective at these levels. So while that's been more of an issue for, again, some of our Northern Hemisphere colleagues, it hasn't been for us.
Dr. Bollard, do you have any views on the merits of exploring ways to enable people to break their longer-term mortgages so that they can move to lower fixed-term rates?
Well, I mean, we note that there's a matter of private contract in this. When people go to banks for mortgages, they sign up to a set of conditions, and normally when they sign up there'll be some clause which mentions breaking a contract and the implications for that. So that's part of normal business activity.
There's clauses in those mortgages, as has been pointed out, that allow the banks to recall the entire sum, and there's obviously extraordinary circumstances facing the economy, and your ability to influence liquidity or influence the amount of the effective monetary policy is being severely constrained at the moment by the difference between the effective interest rates and the actual interest rates.
Well, we are more effective in the sense that you're seeing more borrowers going to short-term loans at the minute, and as a consequence we've